Expert news and views on the Lowcountry real estate scene. The Brian Beatty Real Estate Show on 1250 WTMA.
Welcome back, folks, as the Brian Beatty Real Estate Show continues here on the Big Talker 1250 WTMA and WTMA.com. I'm live in the studio this morning, sitting here looking at my main man, John Quincy, who's ready to take your call. If you have any real estate questions, the number in the studio is 843-556-1250. That's 843-556-1250. Now, if you want to reach out to me personally, if you have a real estate question, you're thinking of buying or selling, something I say strikes a chord, or maybe you just have a general knowledge question that you don't want to ask on air, my personal number is 843-800-0065. That's 843-800-0065. Or you can go online. You can check us out there, learn more about my team, what we do, what we sell, how we do it. A lot of information on there about the market and the process. Listingsincharleston.com. That's listingsincharleston.com. So let's get back into it, shall we? We were talking about, there have been multiple reports that have come out recently shifting their opinion of what's going to happen to the real estate market next year, 2024. In the majority of cases, overwhelming majority of cases, the outlook's getting worse, not better. So we were talking about kind of where we are right now, right? What's going on with inventory, the fact that it's low. We've got mortgage rates that are 3% or more higher than they were at the beginning of the year, sometimes more. We've got incredibly high home prices. So what's going to give, right? What part of the dam is going to give first? Well, there's three different, I think, kind of levers that can be pulled here that are going to have a big impact on the real estate market. And the first is just if inflation decelerates and financial conditions just loosen, they get better, right? That would, of course, in theory, push mortgage rates lower, improving affordability, right? So first one is just we tame inflation. We get that under control. The second would be that we just collectively make more money, right? Rising incomes, which are up about 4.5% year over year, by the way. You make more money, you can spend more money. That makes sense. And then, of course, the third would be home prices continue to fall. Those are really the three factors that make up affordability: mortgage rates, prices, and wages. Now, which one is going to get pulled first? More than likely, well, we're seeing it right now, prices are going to go down. The big question is, of course, well, by how much? There have been so many, I think, reports that have come out that focus on what's going to happen next year, but really what you're starting to see as a big material change is that they're starting to push those trajectories into 2024. In other words, this isn't going to be just a little bump in the road. I think we're going to experience some more hardship for the next 18 to 24 months. And there's two different scenarios here. There's kind of like the bull case and the bear case in terms of what's going to happen with home prices. The bull case looks something like this. From the top of the market to the bottom of the market, prices are going to go down around 10%. Okay? The bull case is where we believe that home prices next year are going to fall about 5% because we're anticipating there being about a 5% drop this year. We've already seen a 1.3% drop from June to August. So in this scenario, we're anticipating low inventory due to something called the lock-in effect. Now, what's the lock-in effect? Well, no one's really incentivized to move because they're locked into a 2 to 3-ish% mortgage rate. At the same time, lower mortgage rates incentivize more purchase demand, right? And that could shake a lot of folks off the fence and motivate them toward a purchase. There are a bunch of different, predictions as to what the mortgage rate is going to be next year. It's coming in somewhere in the low sixes is I think, the best guess out there. But if the Fed successfully tames inflation before that, sooner than expected, we could see those rates below 6%. And I think that's ultimately the direction that we're trying to get to. But again, if this so-called lock-in effect, right, meaning homeowners who just don't want to sell because they don't want to give up their 2 to 3% mortgage rate, if that continues into 2023, it could make inventory levels tighter than expected. It's a little bit of a double-edged sword. Now, the bear case doesn't look quite as good, right? It has home prices going down about 20%. If a deep recession takes shape, it manifests, we could see about a 20% dip from the top to the bottom of the market, including somewhere around an 8 to 10% decline in home prices next year alone. And this was something interesting that I pulled from the research article, which I'll quote. A common scenario that we are presented with when discussing the bear case for home prices is a longer and deeper recession leading to a material increase in unemployment. What we think would be a more likely cause of a home price bear case would be an intersection of weaker than expected demand with a larger increase in inventories than currently forecasted. But even if this, so that's the end of the quote, but even if this bear scenario were to manifest, they don't think, many research articles don't think that a full-blown repeat of 2008 is among us. And I agree. But there are a few more things to think about here. First of all those folks that were able to work from home, this whole work from home movement, a lot of that's already happened, right? A lot of those folks have already transacted. Most of them can't afford to do it now. Or they move here and they pay astronomical rental prices. They go and they furnish a. By the way, little pro insider tip for you. You should just go to some of these really nice apartment complexes at the end of every month, because there routinely are people that move here from out of state that will go and furnish an entire apartment, use it for 6 to 12 months, and then throw it all away. And it's perfectly good furniture. You want a little side hustle? Go drive around a truck and pick up all this furniture and resell it on Marketplace. If I couldn't sell real estate anymore and I needed quick cash, that's what I'd do. So anyways, there you go. Free tips on how to build wealth from your radio show host, Brian Beatty. But anyway, so we've got all these folks that, that were likely going to be a transaction in the next, let's call it 3 to 5 years, right? At some point in the next 3 to 5 years, they were going to move anyways. But they said, hey, you know what? Money is basically free to borrow right now. It's 2.5% to borrow this money. Might as well just do it now. So it wasn't just all the folks that were now able to work from anywhere that relocated to Charleston. It's the people that just made sense out of moving in general. Well, now we've got this lock-in effect where all these folks have 2 to 3% mortgages, and they're looking at buying a bigger, better home with a mortgage rate that's more than double what they have now. And it just, when you put the numbers on paper and you analyze it, and you're like, man, I don't know if I really need 300 more square feet. Or I don't know if being a mile closer to whatever is worth that. And that's the situation that we're finding ourselves. And that's why you've got this strain on inventory. There's just a lack of demand to sell. But then you've also got investor-based purchases being down a little over 30% in the third quarter of this year, which was one of the main components that really supercharged our real estate market over the past few years. I mean, you talk about hedge funds, these iBuyer programs that came in and were paying you top dollar cash, no contingencies, no appraisal, no home inspection. They're just buying your house for top dollar. Those days are gone. And I know we worked for these hedge funds. We were approaching sellers off market and saying, hey, your home has been identified by this investment group as something they'd like to own. Here's what an offer from them would look like. It's reduced commission, it's this, that, and the other. On paper, it's like, oh, wow, it's really hard to pass this up. And so they started buying property after property after property. And what was really happening is they were kind of controlling the narrative as far as prices are concerned. I mean, there were stories in some neighborhoods, certain entities owned like a dozen homes in one neighborhood. And so they'd buy a few homes for, let's just call it $400,000. And then they would buy something for $500,000. They'd actually pay a little bit more than what the house was worth. That was obviously a little easier to do when the trajectory of the market told us that, hey, prices are going up. There's no end in sight. So they'd go and they'd buy all these properties, like 8 properties in one neighborhood for one price, and then they would overpay for the other property. And guess what they did? It looks like, oh, wow, why would they pay that much for that house? Well, it's because they just made the 8 other homes that they already owned in that neighborhood worth more. And so, there will be a investor-owned inventory that will hit the market, because guess what? Just because you're a real estate investor doesn't mean that you're any good at it or good at making money through real estate investments. I mean, look at Zillow. They lost over $500 million on their home flipping business when they decided to start buying properties. It turns out buy high, sell high isn't an awesome strategy. So if you're a buyer in this market, how do you digest this information? What should you be doing right now? Because I tell you what a lot of folks are doing is they're sitting back, they're watching, they're waiting, and I can't say that I blame them for it. So sellers, you need to understand the mentality and the motivation of buyers in this market right now, because if your expectation is to hit the market and get multiple offers and sell in 2 days, and if you don't, then something went catastrophically wrong, we need to really help you understand the dynamics of the current market. So I want to talk about positioning a home to sell right now, the timing associated with that, and the mentality that you should have, I think, if you're going to sell or buy right now. So stick around. We're going to do that when we come back. Again, if you want to call into the studio, you've got a question for me about real estate, the number here, 843-556-1250, 843-556-1250, or you can check us out online, listings in charleston.com. Stick around. We will be right back.
It's the Brian Beatty Real Estate Show. Broadcast Saturday mornings at 9 and Sunday mornings at 10 on the Big Talker, 1250 WTMA.